You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. Well, inflation, the person you're about to hear from, said that it was going to peak in Q3. Is that the case? Well, commodity prices certainly have gone down a bit. And, well, interest rates certainly have gone up. But what else is going on? Let's talk with Erik Hadik of Inside, that's INSIIDE track.com. Erik, great to have you back on the show.
Oh, great to be back, Kerry. Thanks for having me back.
Hey, so when we last spoke, which was in June, you were calling for inflation to basically peak in Q3. You sticking to that forecast?
Yes, I would say that most of my indicators and the markets that I'm watching with respect to that are still showing that we're peaking. And obviously there are many different gauges of inflation, from your economic CPI and PPI to your commodity related things like Goldman Sachs commodity index and different commodities, which are more my focus. But I do think that we are very near a peak in the overall inflation. Doesn't mean that it immediately goes down from there, but that when you look back in time, you'd probably be identifying this time frame as the transition point.
It isn't like, though, that it's just going away. It might be peaking at 10, 11%, so it goes down to 6 or 7, right?
Right, and that's the thing with any type of successive cycle highs or lows. That's all that particular conclusion is telling you. And that's what I kind of remind my readers, is that each indicator and each cycle and whatnot gives you a certain amount of information and data, but don't try to read into it too much. When you're in an uptrend, you could have a particular market, let's just say a theoretical market. It could top at 10 in 1 month and pull back to 8 and then trade between 10 and 8 for a year and a half. Well, that 10 would have still been a cycle high, but then a year and a half later, it might then surge up to 12 or 14 and set a new cycle peak and then kind of tail off from there. You can have higher highs in an overall uptrend. And I'm not saying that with respect to inflation here, just to make the point that a cycle high in and of itself does not tell you that there's some big downtrend to immediately follow.
Right. Okay. So I can buy that. And just because it hits a high doesn't mean that it goes away, in other words.
Exactly. Yes.
Right. So it's going to be with us because these inflationary cycles historically last for over a decade, don't they?
In some cases, you've seen that. Yes.
Yeah. So well, I guess we're going to find out soon enough. So what about the dollar? It's making highs. It was trading, above par with the euro, which we hadn't seen in over 20 years. Looks like everything's coming up for the dollar.
Yeah, and I should divide that answer into two parts. One is the broader dollar outlook that I've had. And since early 2021, explained how you've had this really consistent, it's about a 3.25 year cycle between key lows and between key highs in the dollar. And that was indicating that we should see a multi-year bottom in the first quarter of 2021. And combined with several other indicators, the overall wave structure that I was perceiving, it all told me that the dollar should head significantly higher into early 2023, but that could be a major peak at that time. So we're still in that overall uptrend. One of my primary upside price targets for that overall move was at 110 in the dollar index, possibly spiking up to about 112, 113. But the interesting thing to me, or the thing worth watching, is that we have just hit that target, obviously earlier than when I expect a final peak. So in many cases, you can see a market test a level like that, test an objective like that, and then go into one of those pullbacks and consolidations that we were just alluding to, but then ultimately rally to new highs leading into that preferred timing for a final peak in the first quarter of 2023. But if you look at, and again, this is from the dollar index perspective, because even with the dollar, there's multiple ways of measuring and gauging it. Dollar in terms of gold and precious metals gives you often a completely different perspective. But the dollar index, based on a basket of currencies, bottomed in 2008, set a secondary low in 2011, and has been heading progressively higher ever since. So this is what could be the culmination of a 15-year uptrend in the dollar index. And it has also traded in a fairly clear 5-wave sequence for anyone interested or that takes a little bit of a look at Elliott Wave. This could be, and I expect it to be, the terminal rally in the dollar leading into a multi-year peak next year. So that's kind of significant to me. I think there still could be some more upside, but getting back to what I was saying, two portions of that outlook, that's the broader one. But from an intermediate perspective, I do think we're probably going to see a peak here in that 110 handle on the dollar index. And it wouldn't surprise me if we get that peak right with today's Fed news, interest rate hike, kind of a buy the rumor, sell the news type of thing. I think that traders have priced in about the most extreme expectations with, a 3/4 point hike priced in. And then after the CPI of a couple of weeks ago, murmuring starting to come around about the possibility of a full basis point hike, which would be first time they've done that with Fed funds, I think, since they've used that in their arsenal. And so I don't think that's going to be the case, but the markets have priced in such an extreme where interest rates are concerned that any signs of missing that mark or anything slightly less than what's already there is likely to see some reaction in a lot of the markets that are moving based on that, and not even that the realization has to be less than the expectation, but you've got this kind of situation where what more can the markets and the economic numbers and the Fed do to continue to drive bonds and notes lower, continue to drive the dollar higher beyond these extremes. So it's often at those times where you get intermediate tops or bottoms in the market. And I think you're going to see something similar in reactions in several markets. I think precious metals could have a decent little pop after the Fed news is out of the way. I even think that cryptos are in a time frame and a position for a pretty significant bottom. So you may get one of those things where today's news and announcements and forward-looking statements are the culmination, not an inception of anything more in a lot of these markets.
All right, so let's talk about interest rates. Supposedly we're getting a 75 basis point hike today. When do the interest rate hikes end, and when do interest rates start coming back down, or do they?
Well, I don't follow the rate hikes as intently and the exact interest rate, whereas the bond market and notes and other interest rate vehicles, which trade inversely to interest rates, sometimes they will, as you get to the end of a rate cycle, either a rate hike cycle or rate drop cycle, they'll show signs of turning before the final rate hike in this case. And with the case of bonds, they have had for probably 30 years now, a very consistent 4-year cycle that I talked about throughout the end of the 2010s, and why bonds should see a major top in mid-2020, which would be a major low in interest rates, and see a 2 to 3 year bear market from that point forward, which would be a 2 to 3 year uptrend in interest rates. And I put out several reports and articles back in second quarter of 2020 talking about this. That was at the same time that Jerome Powell was coming out, and I'm paraphrasing it, but he was saying that we kind of needed some inflationary types of things. And then, a year later, it was just transitory. And now all of a sudden it's like, oops, this inflation's a real thing. And so these cycles were very precise in identifying when that turning point was coming. And I think that you will see a subsequent low in interest rates. And so between that low of 2020 and the future low, you get a 2 to 3 year rally in rates and then a 1 to 2 year pullback. That next low should come in mid-2024. And in between that, I think that the peak in actual interest rates is probably going to be in early 2023.
Okay, so we still got a few months left and a few more rate hikes, huh?
Well, and that's one of those things, too, that, there could be some reason that they really scale back on that. If you get the markets reacting a bit more than they anticipate, more to the downside in, say, stock. Mm-hmm. You've seen housing starts and even housing prices start to soften a bit. You haven't seen it in CPI and PPI yet, but there's kind of been this mix of numbers that could be showing signs of something to come, or could just be, 1 or 2 month blips. But, if you start to get a little more uncertainty than that, they may scale back, and it may just be that you get 1 or 2 final ones that stretch into early next year. Doesn't mean that the trajectory of this uptrend in rate hikes is going to stay the same, and it usually doesn't as you get closer to a peak. So yes, that there certainly is likely to be a couple more hikes, but maybe it doesn't turn out to be quite as extreme as they're currently thinking.
Mm-hmm. All right. So the future is always uncertain. Oil, what are you seeing there?
Don't just survive, thrive. The Financial Survival Network.
Osino Resources is a Ross Beatty-backed gold exploration company in mining-friendly Namibia. Osino's district-scale land package is situated near 2 producing gold mines, one of which Osino's management team previously developed and sold to B2 Gold. Osino's founders and management are experienced mining professionals who have already successfully developed and sold 2 companies in the past 7 years. Osino has a tight share structure, and with its current treasury, it can self-fund the advancement of its gold discovery into at least 2022. This is an exploration company with drills turning that you'll definitely want to pay attention to. Osino trades in New York under the ticker OSIIF and in Toronto under the ticker OSI. To learn more, go to osinoresources.com. That's osinoresources.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
Oil has still remained below that pretty significant cycle high that I discussed back in June. We actually had a pair of related cycle peaks in early March and then mid-June. I do think we could see a little bit of a bump up into early October, but I think that a pretty significant top is in, and that oil, in particular crude, could probably stay between the $80 level on the low side and 110 on the high side, and more be a volatile trading range here. I do think that some of your energy markets, and natural gas being one of them, still has another move up in store, but that could also wait until a little later in the year and lead to a peak in early 2023. So we could see more of the consolidation that we've seen right now, but from the perspective of the cycles that I use, that a final top is likely to wait until late 2022, early 2023.
Right. And again, it's important to understand that just because it might peak doesn't mean it's going back to where it was, right?
Right. We often have, and at major turning points, you'll get the type of divergence that kind of is inherent in what you were just saying, that you might have natural gas spike up to new highs and some of the other energy markets rebound to secondary or lower highs. And when you get that type of divergence coinciding with when cycles are peaking, that's often an extra or a reinforcing indicator that a top is forming.
Okay, interesting here. So precious metals, what are we seeing here?
Precious metals remain in a kind of an overall downtrend from earlier this year. I do think that silver has been showing signs. This was a time frame when I thought that we would see silver start to overtake gold as far as the percentage and magnitude of its gains, that even with this phase of an inflation cycle where you've got interest rates and the strong dollar weighing on gold, but silver now getting to the point where I think some of those inflationary factors are going to start benefiting silver more than gold. And from a technical and cyclical perspective, that's also what I'm seeing. But I'm looking for a bit of a rally here. I thought the month of September, maybe stretching into early October, could see some move up in precious metals. Others, your platinum and palladium, are actually showing a bit more strength than gold and silver. So there's some divergence too that's very important to watch. And then you go to the opposite end of the extreme, not a precious metal, but industrial in copper, that it has been selling off from its peak for many months now. And that gives its own indication of expectations for the economy and industry and whatnot. But just from a intermediate perspective, I do think that gold and silver have a rally in store here. And there's a couple key indicators I'm going to be watching toward the end of the month, early October. It should help me determine whether I think there is still another low in store later in the year, or if some of those metals will just pull back to a higher low at that time. And then the first quarter of next year could be a more positive time for gold and silver.
Okay. Well, it looks like they're hitting lows now. If they're not at their lows, they're pretty close to them, aren't they? As far as gold goes, anyway.
Yeah, gold definitely, but it's been right back at that 1680 level which has been, first it was key resistance for a couple of years. And now since 2020, it's been key support on the pullbacks. So it's a pretty decisive place for gold to be right now. And there's some kind of uptrending averages and indicators that I watch that are also right around that 1680 level on a monthly basis. So where gold ends up at the end of September, where its monthly close is, will have a determining effect on how those indicators and averages are perceived. But that is a critical level for gold, and for any gold bulls, that's certainly the level that needs to hold on weekly closing basis and monthly closing basis for gold to have a chance at a new run-up from here.
All right. Any other markets we should be paying attention to at this point, Erik?
Well, like I said, or that I mentioned earlier, I actually think that Bitcoin and cryptos are at a pivotal time. Since late November, I did a series of articles last year that explained why I thought cryptos, led by Bitcoin, were a bubble about to burst, and why November, December was the culmination of some consistent monthly cycles in cryptos. And every month since then, I have summarized my analysis by saying that Bitcoin should continue lower into September of 2022 before we would have a good chance at a major bottom. And we're now at September. We have Bitcoin retesting its lows. Things like Ether have actually shown a little bit more development. You've got some divergence there where its low was in June, and it turned some of its intermediate indicators a little more positive. Now we're into that pullback, that second wave from an Elliott wave perspective that you talk about. After your initial rally, you get a pretty significant pullback, but it doesn't go to new lows. So you're in that phase where some of the other cryptos and some of the blockchain stocks are concerned. Mm-hmm. And if they can kind of bottom here, this week is really the time frame when I was discussing that September 2022 for a monthly low. As we got into March and April of this year, there was also some longer-term weekly cycles that were pinpointing the time frame between September 6th and September 23rd as being the ideal time, the time with the greatest synergy of weekly and monthly cycles for a bottom. And that means that you'll start to see some of those cycles turn positive within a couple days from now. So we're at a critical time frame. We've got really strong support, or very noteworthy support. How strong it is remains to be seen. But in Bitcoin, between or right around the 18,000 level, in Ether right around 1180 to 1280. And so I think that there's a pretty good chance for those markets to see a run-up in the coming weeks and months. I just put out a special report for my subscribers. Any new subscribers get this report as a free bonus, but kind of describing some of the factors that are coming together right now, and even that discussion on the dollar. And if the dollar starts to level off here, it doesn't have to go into a major downtrend. All it needs to do is show that it is topping for a couple of months. And that's kind of one of these weights that has just been suppressing precious metals and cryptos. And if you kind of give any hint to traders that weight is being lifted a bit, that's when you often get these quick moves to the upside in those markets. And it's always the pendulum swinging farther than it should. They go down farther than they should, then they snap back up more than is really justified. But that's a time when you have some good trading opportunities, and I think that they are very close at hand in cryptos.
All right. Well, I think that's really kind of what I've been thinking, although it looks to me like Bitcoin's been so weak lately, and the chart really looks negative, but it keeps bouncing off its 2017 high of around 19,700. Right now, it's a little below. It keeps going back and forth. Possible it could go lower?
Yeah, it's possible it could see a quick spike down, but as you say, that is a key level. I call it resistance turned into support. And even on some of the charts, the longer term charts that I included back late last year and early this year in some of the related reports, that was one of the three key levels that I had illustrated on my charts, that was a major downside objective, major support to look for down at that 18 to 19,000 level. Really the only other key level below that is down around 14,000. But you've seen, I explained too, how when you look at every decade going back for the last 40, 50 years and the different bubbles that we've seen in different completely diverse markets, from precious metals in early 80 to Japanese stocks in the Nikkei in late 80s, early 90s, to your tech stocks in the dot-com bubble in early 2000. Each time those bubbles would often, or in every case, would see a major drop where they would return to about 20% of their peak value. And even if you look at the NASDAQ 100 in the 2000s, it dropped back to that same percentage. And that's right around where we are in Bitcoin with respect to its peak. So even if you're just looking at how bubbles like that often resolve the whole bubble, and that bubble doesn't always mean that that market's done with either. You have tech stocks are a perfect example. It took years and years for them to ever get back to for the NASDAQ to ever get back to the highs it set in 2000. But it was just a case of a market getting ahead of itself by so much. And so once you have those bubbles burst, then you do have a kind of a considerable amount of time where the market builds a base with some sharp rallies and some equally sharp pullbacks in there. So we could be entering into that next phase for digital currency, for cryptos, and just also the transition where you end up with new leaders leading the next phase of their overall trend.
Got it. All right, Erik. Well, we appreciate your insights. And as they say, the future is always uncertain, but does follow patterns for sure. Best place to find you now on the web? I know you got a few sites.
Yeah, we got a couple of sites, but really the best place is insidetracktrading.com. That's inside with the extra I in the middle, INSIIDE, tracktrading.com. But we also archive a lot of our reports that pertain to 40-year cycle at a site that's 40-year cycle, 40yearcycle.com. But Inside Track Trading is the best place to get descriptions of all our publications, everything else we offer, and best way to contact us.
All right, excellent. Well, the link's in the show notes to this interview on financialsurvivalnetwork.com. Make sure you sign up for your free newsletter. While you're at it, send us an email. If you got a question for Erik or myself, KL@kerrylutz.com. I'd like to know what your thoughts are on cryptos and on interest rates and inflation. You think inflation's going to peak, or can it go higher still? That's really the question. And I guess we're going to find out in the coming months. Erik, always a pleasure. Thanks so much for stopping by.
It's my pleasure, Kerry. Thank you.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.